Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now to the show at hand.
Hi there, Yoni Schmidt here, hosting today's episode of the Same Day Podcast, where I connect with top business and real estate leaders. Today's episode is brought to you by Keyrenter Property Management. At Keyrenter Property Management, we are a full-service property management company, helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of property management. That's why no matter what rental you have, single-family homes, condos, townhouses, apartments, we have the management solutions for you. Go to KeyrenterPMC.com or email us at info@KeyrenterPMC.com. I have Chad Franzen here of Rise 25, who has done thousands of interviews with successful entrepreneurs, investors, and CEOs. And we have flipped the script, and he will be interviewing me. Chad, welcome to the show.
Hey, thanks so much, Yoni. Great to be here. I am really looking forward to talking with you today. You're sharing your screen right now, and we're going to find out basically what life is like for an investor who is looking to buy property in one of your markets. I think it'll be very valuable for, a potential investor in one of your markets, or just anybody really who's interested in getting an investment property. So you're already sharing your screen. Why don't you take us through that process? What is the process for an investor who is looking to buy property in one of your markets?
Yeah, thanks so much, Chad. I'm excited to be here and show you guys this process. As you can see, we are standing outside of 149 North Oswego Avenue, a property in Tulsa, Oklahoma, which was purchased by an investor in roughly 2020, potentially 2019. So, we're talking about a time where interest rates were quite lower than, the December of 2023. And this investment, I just want to preface the fact that this investment, may look really juicy in today's world, but, we have to understand that real estate also tends to be forgiving in the long term. And I generally think that as an investor, there's no better time, to jump into the market than yesterday. Because a wise man once told me that everything looks cheap in the rearview mirror. So, 149 North Oswego Ave in Tulsa, Oklahoma, it's a duplex. And the process itself starts with us analyzing the income potential from that property. Since we were managing the property at the time that the investor purchased it and knew how much rent we had been collecting and what the potential for the rent was, it seemed at the time like a good investment. In today's standards, this investment is currently bringing in $1,490. We can see that here on the income statement that I have pulled up for the property. And when we're analyzing the rent itself, you can see that there's maybe a little bit more room to go up a little bit. There are some comps here that indicate $1,600, $1,495. It's an interesting opportunity, I would say, and it was an interesting opportunity at the time. So
rent right now for that unit is $1,490 a month.
Yeah, rent right now is $1,490 a month. It is a duplex, although it's showing it up here, duplex triplex, but it looks like it's a 3-2. And the truth is, yes, it is, because it's a 2-1 on one side and a 1-1 on the other. It has 2 kitchens and 2 tenants that have been living there for quite some time now. Great tenants. And, when we come across an opportunity like this, we're analyzing the rent and we understand that, the purchase price is favorable for an investor, then, we can basically pull the trigger and submit a contract.
So is that rent price, I'm sorry to interrupt you, is that rent price the total between the 2 tenants or on it for each one?
The total between the 2 tenants.
Okay.
Yeah. So thanks for clarifying that. But before we would submit any contract or, pursue an opportunity, we want to analyze, what we project the investment how we project the investment to perform over a longer period of time. As you can see, I put in some of the information that we know is a fact. And this property, although it was purchased on a package, so when you go to the Tulsa County Assessor website, it looks like it was purchased at the price of $112,000 when in fact it was also purchased with another property, 1319 North Allegheny. So both of those were on one contract that was $112,000. And the allocation was that this property was worth $72,000 at that time. 1319 North Allegheny is a completely different investment. And, it also it performs at a level that is similar to this one because of the forced appreciation and the value add that we had to put into it. And, the fact that our crews on the ground were able to do such a good job. So we know that back to 149 North Oswego, the rent is $14.90 a month. We should assume about $22.50 for the title charges, assuming a 25% down payment. At the time, a 4.5% interest rate on a 20-year note, right, with 1% in loan fees, with 7% maintenance expense, 5% capital expenditures, $1,100 for property taxes, $800 property insurance. You can see the parameters that I put in here, $4,200 for utility expenses because the owner is responsible for the utilities at this property, water and electrical and gas. Average length of stay is 2 years with about 30 days between each tenant, and a lease commission of $695. So I put 100% here, and then $495 so I put about 50%. And then we're assuming annual rental rate increases of 3%, expensive inflation of 3%, and property appreciation of 3%. And as you can see, it brings us to a 12.9, almost 13% cash on cash return.
So can you explain what that means?
Yeah. So the cash on cash return is basically, how much money am I getting today in cash, given the total investment that I have made, which at 25% of 72,000 with all these other charges, you're looking at a roughly $21,000. Mm-hmm. So how much cash is coming in compared to the capital outlay that I have made? And when we're looking at the financial indicators, we want to understand a few things. We want to understand that the debt coverage ratio right here that is shown at 1.87 will be 1.1 or 1.2 or higher, of course, because that's where a lender would feel comfortable lending on an investment property. We can also look at, our projected returns and just like projected cash flow, which helps us understand, a lot of other things here. And, overall, what the cumulative cash flow over a period of 30 years and your cumulative wealth built, right? So from here, basically, if you were to make this investment and bring it on with us at Keyrenter, we would basically create this property in our system, and from there we would feed it into an investor dashboard that allows you to not only gain a higher level of transparency, but also a deeper level of understanding, because not only do we bring transactions into this platform daily, so you can see your income and expenses as the month goes by, with income, of course, being heavier on the front end of the month and expenses happening throughout the month. You can also see what your true performance looks like, which is difficult to do if you're not living in an Excel spreadsheet as a real estate investor.
Wow, that's great. So take us through this.
So yeah, these are investor dashboards that are exclusively offered to Keyrenter clients. It comes with a marketplace where you can buy and sell properties and access to our closed marketplace, off-market opportunities that investors can find. And it essentially provides you with, a full summary. It's broken down by property, but then you also have a dashboard that shows you your entire portfolio, what your net worth is in real estate, what your total equity is in real estate, your appreciation. It tracks your principal pay down, shows you your true cash on cash returns based on the income that feeds in daily from our platform, your cap rate, and it breaks down your monthly expenses, as you can see here, very nicely. From here, you can just gain a better understanding as to, is this worthwhile? Should I continue holding on to this? Does it make sense? Should I pull out equity? Should I redeploy capital into something else? Or am I waiting for interest rates to come back down? And that's the time that I'm going to make that move. But if you're not living in an Excel spreadsheet, it's hard to see this.
Mm-hmm. So does Keyrenter provide clients insight into this data? Like let's say I'm kind of ignorant, but I see all the numbers there and I come to a conclusion like this isn't worth it. Would Keyrenter maybe redirect me if I was wrong? Or do you just...
Yeah, that's a great question. And I think that generally, yes, we would. And we tell our clients, we tell our clients as it is. And if it's not something that's worthwhile, then why continue to hold on to it? If you're not going to be happy at the end of the day, I think it's better for you to give it up and, try with something else. So whether you're doing a 1031 exchange and going into a different property, or you're selling it, starting over, taking that capital and that equity into some sort of different investment vehicle. In the future, this platform right here is powered by blankethomes.com, which is an Israeli software company out of Tel Aviv that offers this to landlords and real estate investors through their property management companies. They do plan on also using, I believe, and don't quote me on this, but Lior Abramovich and his wonderful CTO Sagi Medina, they're looking into solutions where they can leverage artificial intelligence and machine learning to help landlords make better decisions overall.
So I know this is not necessarily representative of every single property that people invest in with you guys, but based on this data, almost 17,000 a year in passive income, the property value has more than doubled in the 3 to 4 years since it was purchased. I'm guessing you would recommend that this person, whoever it is, stick with it.
I would stick with it. Yeah, that's generally my philosophy. In life is if I was able to purchase this property, I'll probably just stick with it.
Okay.
Let my heirs deal with it.
Sure. Okay. What else do we need to know then? Anything?
I really think we covered a lot here. I don't know if you had any other questions or, anything that you would add to this.
So why would you say this is particularly valuable, especially if, let's say there's competition in terms of property managers that didn't offer this kind of service?
I think this is really valuable just because of the heightened level of transparency, really, because when you are an owner that hires a property manager, you typically have to wait until the end of the month when you receive your owner statement to see what's going on with your property. Some property management companies pay middle of the month, so you see what happened in the last 30 days, right? But usually you're always reactive to issues that are coming up. Here, when you log into this, it offers you a checking account like experience, and you can see things daily and you can understand what's going on with your property. You can have a little bit more control over your investments and try to perform them at a higher level and with overall better performance.
So I see this has a net operating income of nearly 8,000. Is there what would you say? I know you're taking us through the process, but what would you say is kind of the okay, maybe we need to reconsider this if it's a negative operating income or if you're just breaking even? I mean, I would think that operating income is pretty good. Is there a low one where you're thinking like, okay, we need to make a decision here?
Yeah, I think it really depends on the investor's personal situation. So if you're a high earner on a W-2 and you make a lot of money and you can carry these losses from a tax perspective, this may be beneficial to you because at some point you will turn the corner. That comes down to asking the question of, is this the right property? Is it long-term a good property? How much deferred maintenance does it have? Is this something that, will appreciate over time, maybe a little at a better rate than what you're anticipating, and it just depends. It really comes down to the personal investor and what they're able to do, right? Some investors operate some real estate for a loss for a couple of years, and then they turn that corner. But those typically tend to be doctors and lawyers and high earners and entrepreneurs and business owners who have the ability to do that.
Is there any way these things can be projected? Like when you purchased this in 2020, could you have plugged something in there and thought, okay, this is what it'll look like in 4 years, or you're just at the mercy of the market?
I think it's interesting. That's an interesting question, right? Because in 2020, when this was purchased at a 4.5% interest rate, right, there was maybe a thought that interest rates would go up, but it wasn't something that you were focused on at the time, because you think about well, I'll kick that can down the road at the time that I need to. This loan, if it was purchased in 2020, 2019, I believe, it could have been at the end of 2019, will soon also recast, and the investor will have to refinance. So this net operating income may even go down a little if you're now having to pay at a higher interest rate, right? So that's one thing that you could have said, well, we have to think about those interest rates and how they're going to change over time. But in the grand scheme of things, when you're buying stuff, you should look at how sensitive it is to market conditions.
Okay.
Right. And you conduct some sort of sensitivity analysis to understand, well, great, it operates at 4%, but will it operate at 9%? And will I still be positive if that's what I need it to be?
Sure. Well, this is very interesting, very informative, and I can tell it's very valuable to property investors who work with Keyrenter. Thanks so much for taking us through it, Yoni.
Yeah, absolutely. My pleasure. Thanks for having me, Chad, or thanks for joining, Chad.
Yeah, absolutely. My pleasure. Thanks, Yoni, and we'll catch everybody next time. So long, everybody.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.